Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today we are going to cover TCL. We are also covering this week in the Bourse Reviews GraceKennedy, but we are not going to be covering it on this particular report. You can look for that on bourseinvestment.com. So let's go straight into the TCL report. Amidst what's happening in our economy, the shutdown of two plants earlier announced during the weekend. What's happening out there? It's not much different with regard to TCL and the construction sector. Let's see what has happened with the TCL for its full year ended December 31st, 2016. My first graph will show you what has happened with regard to the earnings, revenues, and the expenses of this company. So if we look here, what we see is that revenues have fallen considerably from 2015 to 2016, down by $228 million or 10%. This translates into a fall in operating profit, also caused by restructuring costs, which you will see here. One-time restructuring costs up from $31 to $116 million. Operating profits are actually down from 2015, $446 million to that lower figure, which is $224 million, not on your screen. And after-tax profits have fallen from $428 million to $52 million. This has brought about a fall in the earnings per share from $1.19 in the previous year down to 10 cents in this particular year. So not necessarily a good story. What has been happening then, let's look at some of the events that have taken place with regard to TCL over the past couple of years. You would recall a rights issue, and that rights issue came in at $2.90. and increase the share capital of the company. You will recall debt restructuring, where the company refinanced many of its debt to reduce the financial costs. And then most recently, of course, is the Cemex takeover. Ultimately, the Cemex takeover, which took place in January of this year, January 17th, I believe it was, where essentially Cemex moved from 39% to 69%, having controlling interest ultimately of TCL. What does that mean, and what are the implications? Well, first of all, annual sales of Cemex, the results have been driven to some extent by what has happened with annual sales. And if you look at annual sales by volume, what you would see is that local sales in Trinidad and Tobago, according to the central bank, has fallen quite considerably, down from the usual 655,000 tons to 524,000 tons, or a fall of some 20%. That's not the same with what is happening with export volume, which has actually been growing by 9% and 4%, as you see in the yellow bar at the top. Yet still, the overall story is one of substantial decline in sales volume. So what next? Let's look also at the breakdown of revenues from TCL. Traditionally, its main revenues have been generated in Trinidad and Tobago, as you would see in this red bar. But as we look at the breakdown now, what we are seeing is a flip taking place in 2016, where the main revenues actually came from Jamaica. If you look to the right of your screen, where Jamaica has now moved from 32% of revenues to 41% of revenues, and Trinidad and Tobago has fallen from 42% to 35%. These are factors that would impinge on opportunities and challenges for the company. We go next to our PE multiples and valuations. And what has happened is the earnings of the company relative to price to earnings is 45 times and trailing in 20 17 is 49. What does it mean? It means that the valuation of the company seems to be extremely high in the context of the average valuation of price to earnings of 14. Not much headroom for growth, if you want to put it that way. What's our outlook? Well, at a price of $4.17, where the takeover price was $5.06 or $5.07, the share price of the company has fallen considerably post the takeover, the closing of the takeover bid. As we look forward, we see a number of things. Fall in demand, we've already spoken to that. Increased competition, or should I say competition of a very significant order coming from the rock-hard cement being imported from Turkey. That has driven the price of cement down, where the rock-hard cement, I understand, is being sold at about $45. TCL has had to pull down its price to compete from $60 to about $48 at this point in time. So those two factors, the fall in demand, increased competition, and thirdly, the whole question of increased taxes from the 25% threshold to 30%. That is going to challenge the company opportunities. One, Jamaica is increasing its throughput and its demand. That's a possibility. Other export markets, which would be Venezuela and so on, are increasing in demand, as I showed. We believe that at this particular pricing of 417, the very high P of 41, we have a sell recommendation on the stock. And that's our outlook for TCL. Look at our website for our outlook on GraceKennedy, which you can see in detail there. Look for us at www.bourseinvestment.com when you can get information on more details on this report, as well as go to Bourse Financial, invest at Bourse Financial for more information. You would see our various funds are providing reasonably high returns relative to the market, and you can call us about these things. Have yourself a wonderful investment week. This is Subhash Ram Kelawan for the Bourse Report.